Hi, let's talk about Nvidia. Luckily for me, I do have a chance to review bigger companies' market cap reaching almost 500 billion. Usually I research stocks, companies with market cap less than 1 billion. They are more volatile. That means they have potential to grow 300% in few months, sometimes 800%. They are more likely to pump very much, but so on there could be a situation where you're investing on the peak and you may lose, for example, 80%. So this is not a this kind of company. In long term though, it's showing the good returns, and I'll show you later. So Snowflake looks pretty good. It has past performance very good, health, and also the future growth 3 of the 6. But unfortunately the dividends, I think they have 0.08 dividend yield or so, and valuation side, so basically it's overvaluated. Earnings are forecasted to grow over 12% per year. Earnings grew by 60% over the past year. So they're working in semiconductor industry, and this actually hype industries nowadays, and it's going to grow. I'm not sure about 12% per year, but this is simple Wall Street numbers. And on the risk side, significant insider selling over the past 3 months. Latest share price and events. So they had not so long ago the dividend gap, and there was some of the annual general meeting, product updates, earnings updates, and that is leading to the market performance of 1-year return 94%. And look at this, more frames, so 3-year return 215%, 5-year return 1363%. Those numbers are beating the industry and the market. Long-term price volatility considered as not as the highest, but higher than the industry, and of course higher than the market. And yeah, this is actually pretty good on long term. With dividends, it's a little bit more of the return. So on the valuation side, we see simple Wall Street showing that fair valuation should be $442. But if we open up the tip ranks, so analyzed price target is currently $792 per share. This is actually very expensive stock on the market, and it has currently, based on tip ranks, 4.46% upside. And if we look at the 12-month forecast, it shows $1,000 in good scenarios, so it's more than 30% of upside. And if we open up the market watch, it has similar numbers in good scenarios, high scenarios 1,000, in low scenarios, and like in not low scenarios but low price target 440, on average becoming 752. So based on that, it's pretty much reasonable valuated based on those two diagrams. And this is actually long term very good, and it's liquid, it has volumes, and yeah, but it's now currently it's decreasing. I think this is actually short term move, but anyway, long term this is looking good. So if we open up, for example, here, 1-year return based on current numbers 85%, 5-year return 1,339, and on the max frame 46,000%. So that's actually that's what I'm talking about in my channel. It's more important to have some of the vision, long-term vision. If, for example, let's take 2014 year, January, $15 per share, 4,733 in just 7 years. Just 7 years and 4,733%. That's actually huge growth. And there we had the drop, for example, here in September 2018. How much this drop was? Yeah, minus 50. But still, being, for example, as traders used to say, backholders, you could, yeah, within 1.5 years, you did a break even, and then you actually start growing. So keep in mind, if you have this long-term vision, it could affect mostly very well on the price, on the returns. And of course, don't forget about the diversification. So diversify by industry, by time, and by commodities, and so on. Future growth for the company, like I said, forecasted $12% annual earning growth. And company is profitable. Earnings per share growth is forecasted to grow. It's actually very good. Past performance, historical annual earning growth increased by 20%. They have high quality earnings. Financial health side, we see that there's a debt taken, but anyway, they have cash to pretty much close the debt if they want. Debt almost 7 billion, equity 18.7 billion, cash 12.6 billion. So a lot of cash. Debt to equity ratio 37%, considered satisfactory. Balance sheet looks green, and yeah, there's a on the corner, down in the corner, 7 billion. But anyway, dividends, current dividend yield is 0.08%. Not much, but did they decrease or not? So I think they increased. If we open up the simple save dividends, dividend yield, so they started back in 2013 and they increased that last 5 years 10% per year. Last increase was in, I guess, November 2018. Uninterrupted dividend streak 8 years. Dividend growth streak 0 years. Yeah, so they basically here we see December. Yeah, I think they raised in November, that they pay on the December 2018, and since that they didn't raise the dividends. But anyway, current payout to shareholders, so that's actually the reason of the not so big yield, because they pay only 7% from the earnings paid as dividends, and future payout to shareholder would be in the 2024 4% from the earnings. So they are not paying a lot from the earnings, but anyway, they're paying. Insider trading volume, so here we see on the both side, individuals mostly, some of them decreased, some of them increased. If you open up like that, so last transaction were in June, back in 28th, 4.4 million, but mostly they're selling, so only two individuals brought last time, December 2020 and September 2020. Ownership breakdown, institutions holding 67%, general public 29, insiders 3.8, state or government 0.04, and private company 0.003. Top shareholders, Vanguard Group is the biggest. Last reporting holding date 31st of March. They did not increase or decrease. BlackRock decreased a little bit, 0.6, and I see on the both side. And let's take a closer look at this one. So earnings per share is growing. That is very good. Earnings free cash flow per share is growing as well. Sales in billions are growing as well. So that's actually significant growth. Last 12 months increased 63%. Shares outstanding pretty volatile. So I would say they had better years when they managed to decrease. For example, buying their stock when they believe it's undervalued. So that is one of the things I'm concerned of in some of the stocks I do research, not about this stock, but for example in biotechnology companies, when they have this kind of raising stock 300-400%, they do an ICO, so they pushing the shares out more by that price. So this is actually very good for the business and for the company, but not so good for the shareholders. But anyway, let's look at the investing.com summary of the stock for long-term investors as a strong buy. And let's take a little bit of the notes here. We already know that our world will be based on the computer engineer very soon. It has already started. That's why there's a shortage, because powerful hardware is needed. Chip makes aren't but Intel 760 support. Next 700 doesn't hold. I've been hearing the story Nvidia is overpriced since the stock was $80. Yeah. Anyway, don't read too much comments, because many of the people buy on the emotion, not investing long term. Define your strategy, invest by that. And thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.